Good morning, everybody. Let's get some charts up here. Starting out with SPX. There's nothing down below because markets are moving up. Unless we get a sell-off, that might change later in the day. So this breakout that occurred last week, we've got this minor support level down here. You can see the numbers here, but just an area, basically that Friday's low. Based on this move up, prices should not go below Friday's low. And what is that? 4-1. Thursday. Exactly. Thursday's low. Anyway, so we got this breakout, and especially should not see prices go below a bar like this after a resting period. Common sense. Sideways at resistance is bullish. So you had this bottoming tail bar pull back to the 50. Wide range bar up. This is the factory work, how we interpret price action, regardless of what it is, day in, day out, 5-minute chart, daily chart, monthly chart, makes no difference other than the implications of the higher time frame versus the shorter. Wide range bar, momentum move, creates a void below. Can it create support even in the face of a pivot high? And it goes sideways. Red bar ignored, black and white bullish. And then it broke out. Right? Until it breaks out, we're interpreting it as it should break out, but until it starts to, and it certainly could go down, especially after a bar like that, where it peekaboos above the highs and kind of stalls, but it didn't. And now we've got this gap up. So a continuation. This could come in, right, into Thursday's range and not harm this move. Now, our major support goes way down here because that's the pivot low prior to the higher high. Anyway, so as if it should come down here, ideally, it's not going to retrace or close more than 50% into that because this is a continuation, even though it's a gap. So it may come down into the gap fill. It may go further. And if it does, then look at your SPX option table and see if there's now any premium down below here. And right now, I don't see anything, but on the upside, and again, this is moving up, but you're going to have to go up to like 4070, 4075, which normally would be a stretch to get up there today, but waiting for some kind of reversal. Let's look at where the futures are anyway. Let's see here. Oh, we are in the futures. Okay, SPX. I'm going to say, why was that moving? Get ahead of myself there. All right, so move this up here. So as I said, it's gapping up a bit. It should not. You wouldn't think it could get all the way up into here, right? 4075 has some juice, and I think just under normal ranges, just for it to get up there would be abnormal, especially after a gap. But we look to how far away can we get from the danger, where would be the safe area, and just looking at ranges where the move was, I think that works, right? So waiting, right, to see if this falters. Let's go back to the futures, right? You can see this little wide range bar up right into these pivot highs here. Now you're going to give up some premium, of course, if it comes down under that prior hourly low, but a little bit of confirmation of a stall. Now, if it keeps going up at the open, you just look for some other confirmation of a stall versus this one if it continues to go up. But if it continues to go up, the premium should grow up above. So, you got to assess this thing. It's moving, um, obviously. And so as it starts moving up there, eh, we'll determine when we get some kind of a stall and some kind of shock bar. All right, let's look at spiders. As you can see, 403.50, they're backing off from. So our first reference point of support is Thursday's low. Man, what is going on here? Move these trend lines on e-signal. It crashes it. Give it a second. And it always takes a long time to load. I don't know why. It's just the way it is, I guess. It's been that way for years. All right. Now, since I've got market internals up here, breadth went to an extreme on Thursday. That's good, right? Move out of a consolidation like this, you want to see extreme breadth. Now, it's not at an extreme yet, so today is likely, if the buying continues, is likely to push it up to an extreme, which means this pattern. I'm just looking at the Dow now, which was similar to S&P, resting period at resistance, gap up, assuming it holds on to its gap. A couple of days going up where it creates a void. This gets to an extreme, right? This is already historically at an extreme sentiment. We're going to get a pullback of some degree or sideways chop again. Could be early in the week, could be the middle of the week. We'll see how today ends up. Let's see if I dare go back to spiders again. So 403. I didn't look at any premium in spiders today, but maybe up at 408 if you choose to use that. And obviously this low should not be violated. Breakout bar out of a consolidation right there at the end of the day. I haven't moved these lines around yet. So this resistance area, right, Qs are starting to lead here. What we talked about early last week, that possibility. Scrunching this up here to see. Let's just change it to a 90-minute chart. It's probably easier. So there's really no significant resistance. That's kind of a wide area up there. So I like the way this looks. I know it's up a bit here, but there's nothing to stop it. So as far as trading the futures, I think that tech is going to continue to outperform, and this has the possibility to go higher. So I like the NQs. Intraday, of course, I need to see them pull back. The 5 minute is a little extended there. IWM we'll get to. Right. So here's a gap up and it's underperforming again. Gap, it was underperforming last week. Things, joined in on Thursday. Look how it's backing off already. Right. So it's retesting a pivot low here. So it's not a short just yet. So as always, we'll assess what's going on in the first 5 minutes or so, especially on a Monday. But this is already under its open and it broken down to low there under the moving averages at this support. So we've got support being created, right, at this moment, which is also in an area of a prior pivot low. So overnight data, of course, because there's, you can see nothing here, but this is potentially something that could pop back up again. I like this kind of a pattern on a smaller time frame in alignment with what's to the left. IWM 227. Gapped up into this resistance area. Sellers showed up there. I mean, how simple can it be? Just look to the freaking left and get all the crap off your chart with fibs and so on and so forth. All right. Bonds back down, but stabilize here. You can see just the sideways price action. We know it's over to the left there. I've got it marked off. 10-year. It's still inching down, getting closer. This could be the what ruins the party for the equities here. If this starts to accelerate, this is gapping down below a green bar. And so, those pivot highs up there, but that 2% just might be calling. I thought looking at this over the weekend that this might pull back, and now it's moving back up. So, one of the things we've talked about is that what unnerves the market is the acceleration to the upside, not so much the level to some extent, yes, but it's the acceleration that has gotten the market to sell off. So just moving up into this resistance area, I wouldn't say is a big deal, but you should set an alert up above these levels, because if you're long and this thing starts perking higher, not that you don't have to watch it, but you let the computer make you aware that there's something going on that might affect longs and get them to start selling off abruptly. And crude oil just slopping back and forth, but the oil ETFs look pretty good still. Gold at resistance, but we got this retest. Right, look at that bottoming tail bar and the retest there. TNX is 1765. 1765. I'm not sure where you're getting that number, McGraw. That high up there, 1765, 17. Well, if it gets through that, yeah, just set an alert at that pivot high. So if it gets up there, even today's high, what's the big deal? Let the computer watch it. If it never gets there, no big deal. And silver down too. Well, they're building here. We'll keep an eye on it. Don't want to jump in too soon. Right. Transports just look fantastic. A year ago, if the transports started playing catch up, you were at the end of some kind of a rally, because that's all they did was play catch up. They never led. Now they're leading. So I don't know if that in and of itself is an issue for the markets, where we're getting closer to some type of larger correction. You know, the internals are starting to get there. You've got what's lagged for, a year or two before, now leading the market. So we'll see. We always keeping an eye on these things. And as until things actually turn, it's kind of reading the tea leaves and, being objective. VIX keeps going lower, and it could go lower. All right. You can see down here, there's some down around $10, $11 is where it's been before. So, all right, Dan, all yours. Don't, Glenn, you got here late. SPX, I said, look at 40.70, 40.75. There's nothing down below. Welcome.
Good morning, everyone. Hope you had a great long weekend. And rarely have we had this many open positions in both letters, all on the same side. We're 100% bullish, and every single one of them is fantastic. I did purposely look for a couple of shorts over the weekend, so we do have some of those, but our opens are all great. We got to be a little cautious, obviously, on new longs, particularly if they are gapping up with our 5-minute high. We're going to be patient here. Whenever you get big gaps, you just got to wait. Jake, I just had a little up alarm on our IIPR put spread. DVA is a short watch. I had a down alarm hit, so that's relative weakness into the close, and that's the kind of stuff I was looking for. Breakdown, weakness, sell setup weekly. It's perfect. We set into the close on Friday. Last 15 minutes, they did not fear, holding over the long weekend. So that's a bullish sign. And maybe they got news of the employment release, because Fridays the futures were trading for a while, and they gapped up very nicely. Oki alarm just went off. There's a lot of beautiful oil stocks. So this is one looks great. Thomas, Target, Love, yeah, airlines are up, cruise lines are up. Target, bullish consolidation. Looks like all-time highs, looks higher. Bullish pre-market. So yeah, 15-minute high. Look at Jets here. We have a put spread on it, and I gave this as a new trade, as a swing trade. We'll see if the gap's too big or try to get it on a pullback. But NCLH, look at this thing popping pre-market. I guess on news that they want to get cruising, and I don't blame them. I looked at all 3 cruise ships over the weekend, and they're good put spread candidates, but the juice, it's harder to get good juice now with the volatility so low. But this is not a great directional because of all that resistance. CCL was a swing trade. I have this one in the letter as a put spread. Jake, I don't know what you want me to do with that. Gapping up 50%. AR. Yep, looks great. Yeah, gap reversal, 100% retracement. That was last week's MT Live retracements. And then followed by a shallow retracement, bullish close. Absolutely, it's great. Looks great. There's so many bullish patterns out there. So many. Let's see here. Jose and some others have a bunch to look at here. Number of oils. Yeah, EOG's on our list. Yeah, there's tons of nice oils. Verizon. Yeah, little buy setup. 30-minute high. GPS. It's just going to be picking the best because it's like, feels like shooting ducks on a barrel. Not ducks, ducks on a pond, fish in a barrel. Which to me is like a contrarian warning in and of itself. I think I was telling you all, or Greg, there was an article in Barron's how these Robin Hood people, they're just bragging. They were bragging about how stupid they are, and that they're like, look how easy it is to make money. They're like, I don't know what I'm doing. But I read another article in the journal today. Surprisingly, they said the volumes are down over the last 2 months. Even with they said Robinhood traffic is down 35%, the non-professional volume, and um, Greg, I sent you an email, a screenshot of it. In today's paper, it said, and I don't know where they get these stats from, but it said the non-professional trader just in the last quarter has lagged the S&P 500 performance by about 10%. So even though I guess you have um, individual people making money, collectively they're saying you're not. Yeah, Google looks great. We have that as a put spread. McGraw nailed the entry on Thursday morning. That was very nice. TGH. I think we can find better just because I don't like that topping tail right there. I like this Alfa Romeo. Um, this Alfa Romeo better. See the difference? Compare AR to the TGH. Yeah, Moreau we talked about. There's plenty. Moreau we're already in actually at put spread. TQ's gapping up. This is the levered one. It's up 3 bars and gapping up again. So swing trading is not ideal, but we're up until our bias was in our weekend videos was 100% bullish until we get those internals cooked more to bearish levels. And now that we're getting a gap up, making it harder. All right, let me continue here. Moreau, we talked about. Facebook was on the cover of Barron's, and it was something like, hate them if you want, but it's undervalued. And so when I looked at it this morning, I was actually shocked that it was down this morning. For something to gap down on a cover story bullish is not good. It means that it's cooked in or whatever. So I have no interest in Facebook right here. Tesla. John, yeah, that can make total sense. All right, Tesla here, bullish gap, breakout above Thursday's red bar. So that's bullish. Thursday or Friday morning, they announced better than expected delivery sales. So I was expecting a gap up today here, just didn't know by how much. GME, the little meme stock, GameStop. I actually had this as a long stock over last week's high. Um, that that is bullish consolidation in the upper part of that WRB, filling the gap, going sideways for 5 trading days. But now they are coming out saying they're going to issue stock, which I don't blame them. I remember I was pounding the table. They should have been issuing stock when it was $400. Um, Kramer was on even today saying he agreed with it. But for us. We're pattern traders, and I don't see anything to do with it now. This Wednesday, we're going to be talking about bottoming patterns because there's just been so many of them lately. And I love these where you have multi-week consolidation at the 200 with the 20 MA curling up right here, bullish weekly. So yeah, this is a great bottoming pattern. So McGraw, here's another put spread idea for us. GMS, I don't know why I was looking at this, maybe earnings. Nothing really to do with it now. Weight Watchers got a favorable article in Barron's. Greg mentioned this last week, making the turn at the 50. And now it's gapping up, so kind of missed it. IMAX, Godzilla movie had good results over the weekend. So this is, the IMAX is a theater. You can look at AMC also. AMC, 1032, it's still in the trading range, no interest. Here are Caesar's Palace. This is another one that's going to be in our MT Live on Wednesday. And I was pounding the table on this on Thursday, saying what a beautiful turn this is. And then nice price void. So we're getting a beautiful gap up here. I said trail of 15-minute bars low. Let's go ahead and just sell a third pre-market at 93. Take this real quick. So 93 for a nice gain. So we have two trades on that. Yeah, we got into it Thursday. I got to keep saying Thursday because Friday was a day off, obviously, but and we also did a put spread. That was a beautiful setup. All right, continue. Recent IPO made a new low, snapped right back. It still needs to bottom. AEM I posted. Here's another bottoming pattern. This, we could talk about it on MT Live also. It's a bottoming pattern, right? It's in a downtrend. 20 MA's flattening out, but I like the bullish retest on the weekly. Now they're still in downtrends, and it's still a bearish monthly. But for a 1 to 3 day swing trade, Schwab gapping up here, but it's bullish daily, weekly, monthly. CYRN for Jaime. It's an attempted bottoming pattern, but and we're going to be talking about that Wednesday, about when is the time to say, okay, it's ready to get off its bottom. And I don't have it yet. I don't have it yet. Compare that to little penny stock Grill. Look, this was the bar that said, okay, I'm ready. And then the subsequent bars being bullish consolidation. So Brill is substantially better than that one. All right, MGM, that was a put spread idea, but I couldn't get the juice. That's like GME, we talked about these. I have a CDW alarm going off. Wow, look at the tick. Wow, tick over 1500 at the open. All right, CDW, let's go ahead and trail another third.